Hey everyone, it is Evan here from the Trade Risk on Tuesday, October 2nd, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump right into the charts here with the S&P 500 cash market. This is the weekly time frame. This is where we like to start our analysis. And we can see so far, it is only Tuesday, but so far the S&P 500 is positive this week. It's slightly positive, up 36 basis points here as of Tuesday's close. And if we look at this week's candle, it is so far a narrow range weekly candle so far, and we are off of those highs. We're kind of back to almost where we opened the week. And notice last week we talked about this in our last in our weekend video. We had a inside weekly bar print last week, and you can see we tried to poke our heads above it. We tried to resolve this to the upside. Really yesterday we saw a strong kind of move to kick off the week, but we did fade off of those highs, and we continue to see a little more, well, some stabilization, but no real recovery here on Tuesday. So as it stands on the weekly time frame for the S&P 500, we are still in a wait and see mode. The uptrend is very much intact here on the long-term time frame, but we do have that inside week from last week, and we do have what appears to be at least some indecision in the short term, and that'll be a little more clear when we go down to that daily time frame. So that is really all I have to say. We still have the momentum divergences here. We still have some of the other mixed signals that we talked at length about in last weekend's video. But let us go down to a daily chart now, and let's take a little bit closer look at the action here. So yesterday, again, we started the week off with this gap up. We tried to break through all of this cluster of recent highs here from Friday, Thursday, Wednesday, even Tuesday, Monday. All of last week's range, frankly, tried to resolve to the upside, and you can see we did get this wick up here on the top end. We did not manage to hold on to the majority of those gains yesterday. We faded back down, not quite down towards red territory. We didn't go green to red, but again, just not really the healthiest looking short-term candle there, and we followed it up with some more indecision here today. So at best, we are still just consolidating sideways. Again, we are above some key levels still here for the S&P 500. We are above key trend levels, major moving averages. We are holding above this breakout area still from 2910, this August peak here. So in the short term, the S&P 500 remains resilient. Now, again, we talked about some of the mixed divergences here between the recent flare up in number of stocks hitting new 52-week lows. We talked about some of the breadth divergence, the momentum divergences out there. So there are some warning signs. Again, trend is still intact. So it really depends on your time frame and how you want to really put the lens on the market, how you want to view markets. Now, the bear thesis grew today on Tuesday's session, really this week, with the Russell 2000 continuing its breakdown or really making the breakdown known. We can see here Monday's session, we had this big, ugly, bearish engulfing bar. We opened with that gap up higher to start off the session on Monday. That was the high print of the day, and we proceeded to sell off and engulf the past 2 days, Friday and Thursday's session, making new lows and then following through to those new lows, heavy volume on both of these sessions. So when we look here at a weekly time frame of the Russell 2000, we have a very clear breakdown of this trend line that started from July here. So when we bottomed out, when we pulled back in July, we started this new move up, and we did get a couple of tests on it throughout July and August. And you can see here we broke below it, accelerated below it over this past 2 days. Now, when we go back to that weekly chart, notice I do have, and it was sort of a busy chart. Let me see if this cleans it up here. We also have this trend line that extends from the 2016 low. So this is the big guy here that extends all the way back multiple years now, and you can see it's had a number of tests, and I know I don't have this drawn precisely here. You guys can certainly frame this out on your charts to get sort of a more precise reading. But I think the base case of what I'm trying to present here is the fact that we've been kind of grinding higher, we've been accelerating higher over the past multiple years at this pace here. We found support at this trend line, and you can see we're getting pretty close to testing it where it falls now, and that comes in right around this 161 area. Probably the lows back from July would mark that pretty well, 161, 162. So it'll be interesting to see if we do get a test there and the reaction there. Of course, in the short term, again, time frame is so important. In the short term, if we did see another strong day of selling tomorrow, that would probably be a little bit of a stretch to want to just short a fresh breakdown, right? We would be pretty extended in the short term. So there's definitely going to be some opportunity here as volatility picks up in the Russell 2000, but certainly some bearish developments continuing in the short term. Long term, keep an eye on this trend line. This is something that we may have to think more about, talk more about, and discuss throughout the month of October if we continue to see weakness. One comment I will make here, and again, a little bit off track, and I'll remind everyone for the third time that time frames are important. This is a monthly chart of the Russell 2000, and again, this is the same trend line that extends from the 2016 lows. One observation I want to make, though, is take a look at the MACD up here. This is momentum on a monthly time frame, and notice that we're just coming off of new highs here for the MACD. Now, again, I changed the settings a little bit. I used 8 and 20, so this isn't the standard default settings for the MACD, but the point I think is going to be pretty similar, is that we recently just came off of new momentum highs here, and trends, there's no rule, there's no definitive answer here that says, look, we can't have a trend break and some big pullback if we're coming off of a new high. But generally speaking, when we get that eventually that rollover of a major trend, or we get that big pullback in place, it usually comes after the MACD is already after momentum has peaked, and we generally see some sideways action or some further divergence. We see further pushes in new highs while momentum lags, and then you eventually get the breakdown. It doesn't always happen, but that's generally the higher probability trade. So it just goes to speak that if we do come kind of slamming down into this 160 area here pretty abruptly, for you active traders, you probably have some opportunity for some mean reversion if that's your style, if that's your game. But something just worth noting. I'll let everybody kind of take that as they see fit based on their approach to the market. But that as we kind of sum up everything here, the Russell 2000 clearly speaking to the bear case over the past couple of weeks. Really, it's down 3 weeks in a row now, about 4% or so, 4.5%, I believe, in the past 3 weeks. So a little bit of a pullback, a little bit of selling pressure there. We'll look to these July lows. We'll look to this major trend line down here around 161, 162 or so. And if you are a bull, if you want to get this market back healthy in a firm state, then really, you want to see us back above 168, 169, 170, and in the short term anyway, that looks like there's some distance there and might not happen in the very, very quickly. So that is the Russell 2000. That is certainly where we see some mixed behavior, and the Qs, which look drastically different. We're trading just under these highs here. Yes, there are some choppy price action going on here, but nothing like the Russell 2000. It is still just kind of hanging up here at highs. Volume's dried up a little bit, hasn't quite made new highs. MACD is just sluggish, so we just got really kind of a sideways choppy, not a strong momentum one way or the other. So the Qs kind of in a wait and see mode, similar to the S&P 500, to which way, if we can eventually stabilize here, if we can shrug off the Russell 2000, can this surge to new highs here? Can this help stabilize and lead the market, or is this going to fall the way of the Russell and roll over? The other market, which major market, which we don't usually look at, is the Dow Jones. And if we look at the Dow Jones today, we actually got a new closing high. So we're seeing some very, very split market right now in terms of behavior. We got the IWM, which is just losing support and again, breaking down on heavy volume. And we have the Dow Jones, which is kind of shrugging everything off, closed up 31 basis points, and it made a new high today on heavier volume. So it's a split market out there. I think for traders, you're probably feeling a little more pain out there, or it's a little tougher of a trade, because when the small caps, at least depending on what your universe is, but when the small caps start to really pull back, you get the high beta trades that really start to pull back, and some can do it pretty violently. I know we've gotten stopped out of a lot of our swing positions over the past couple of days, and that's certainly a product of what you're seeing here. So all in all, time frame super important. We talked about some levels to pay attention to, and I think in last Friday's video we talked about some of those mixed signals and how to sort of best prepare yourself. So hopefully we're all kind of strapped in for maybe some unsettling times here, or at least some sideways times, and we'll look to see if we have the S&P 500 and the Qs start to act as real strong leaders here, or are they going to follow in the footsteps of the Russell 2000? So that is the market environment as a whole. Let's take a look at some of the other major markets here. We'll go to TLT here. And the bond bulls today really put in a nice save. Yesterday, things were looking really dicey for TLT as we got a new year-to-date closing low on heavy volume. So we got a new 2018 low, did it on some heavy volume, broke through this very important long-term critical support area, but we got no follow through on yesterday's move. We kind of closed looking over the edge of a cliff, and then we saw the nice pop back higher today. This is a very highly watched, I'm sure at this point, and anticipated level to pay attention to. So the stakes are pretty high here, but TLT, again, if we start to essentially lose yesterday's lows, I know I, for one, would be interested in looking at this to play for a momentum for a continued trend break to the downside here. You can play it via TBT, or you can play it via TMV for the 2x and 3x inverse respectives. So essentially you're betting on rates rising there on the long end of the curve. If we saw a clear breakdown here that is still yet to be seen, again, we came in with the save here, maybe some more sideways consolidation before this happens one way or the other. And it's still, again, at that very important area to pay attention to. So watch TLT. I think that's going to be an important market and something that's setting up for either a reversal trade back into this range, or more continued pain here for the bond bulls. Next, if we look at GLD, we saw some nice volume come in. We saw a nice push to the upside here, 1.15%, still in this sideways range that it's been in for the past month and a half, almost 2 months. But again, we've talked about how this is at least a good first step here at stopping the bleeding after really seeing a strong downtrend for multiple months. It's good to see gold stabilize, good volume starting to come in. Maybe there's some life here in this market, especially when you look at silver, which didn't close ideally. It was up, over 2% at the beginning of this session, but still a good amount of volume coming in. We're starting to see a little bit of at least life and rotation into the metals. Not sure that it's easy, or we should say that all the pain is over, but at least, again, some good signs there, starting to get momentum turning back into the positive territory, which is something that hasn't been seen since June or so for silver. So that and let's look at oil and gas here, which now continues to run away on the upside. USO getting a little bit of a reversal today, or not even a reversal, just a pause in the action here. If we look at this accelerated trend, this channel here, you can see we're starting to poke our heads out from the upper end of it. It was up impressively, up 2.7% on Monday, and again it was up almost 2% on Friday. So USO really squeezing here to the upside, putting the pain on anybody who wants to fight this trend. So USO extended, but looking quite strong. Let it come in, maybe come back to retest this trend line, reset a little bit before you chase. And natural gas, very similar situation. A lot of volume coming in here. We talked about this all the way up. It's over these highs here, so bulls enjoying a nice run here, a nice ramp in natural gas, something that hasn't really happened since the very beginning of this year. So that is it. That is what I have for the midweek video. Lots of mixed signals out there. Know your time frame. time, know your risk, check those positions. Don't fall asleep at the wheel because risk does happen fast. So that is what I have. Thanks so much as always for watching. I'll be back on Friday with the weekend video. Subscribe on our YouTube channel if you want to stay up to date with all of these videos, and I'll see you in the next update. Thanks so much.